Palestinians and Israelis equally deserve to live safely and securely and to enjoy equal measures of freedom.
The chances of there being a surge or a rebound is extremely low.
We are committed at the Federal Reserve to hearing a wide range of voices on the U.S. CBDC.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on Friday, the 21st of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Biden's team backs down on tax. The U.S. president proposes a 15% minimum tax on multinational firms, lower than 21% originally suggested. Ceasefire. Israel and Hamas agree to end an 11-day conflict in the Gaza Strip after the violence claimed more than 200 lives. And the EU backs vaccine certificates to ease cross-border travel this summer. The bloc's finance ministers meet today in Lisbon. Now let's get straight to our top market story. There is quite a lot going on. Of course, the main focus is not only on inflation, but some of the things that we've been watching, which is productivity and then everything in between on the back of earnings. Crypto also at the forefront. Let's get straight to our Danny Berger. Now, Danny, inflationary fears look to be easing this morning. Maybe the market is buying into the Fed's narrative that price increases will only be transitory.
Yeah, it certainly seems that way. Or, perhaps it's the crypto space calming down means the rest of the market can calm down too. But whatever the driver is, it is really remarkable to see this big drop off and break even. So these inflationary bets, I'm looking at the 10-year here, falling about 4 basis points yesterday. And really the catalyst around this time was that TIPS auction. Decent to kind of weaker, but as you say, Francine, really shows that the market is now leaning towards sort of that Fed narrative of this less threatening inflationary picture. Now let's go ahead and see what the overall market is looking like today, because it is definitely more calm than we had earlier in the week. You can see U.S. equity futures doing well, be it the NASDAQ or S&P 500. Treasuries very calm as well, but one of the real standouts here is that the commodity space is weaker. Again, it's feeding into this overall narrative of perhaps the price increases in commodities won't get to a place where we have concerns about inflation and some of those supply bottlenecks easing as well. So overall, Francine, a much more orderly day to end the week.
Danny, thank you so much. Danny, is it your birthday? Because
it is my birthday.
Happy birthday, Danny Berger. Thank you so much.
I'm just waiting for some birthday Dogecoin. That's really all I want.
It was my surprise. There you go. The cat's out. It was Doge or the other one that I cannot pronounce on air because it's rude, but it's a hot new thing apparently. We had a good story on it. Happy birthday, Danny.
Thanks,
now, the United States is calling for a global minimum corporate tax of at least 15%. That's less than the 21% rate it has proposed for the overseas earnings of U.S. businesses, a level that some nations had argued was excessive. Now let's bring in our DC morning editor based here in London, Kathleen Hunter, with the latest. Kathleen, so is this actually a step back by the Biden administration?
I think it's a recognition that perhaps, what they had initially targeted might be too high or too, really not graspable. I think it's important to remember that this is all happening in the context of domestic negotiations that are going on in Washington with Republicans in the House and the Senate, primarily in the Senate, about what is really going to be feasible in terms of what Biden is trying to propose in terms of his economic plan. And so I think that it is a step back and potentially a significant one, and a signal that Biden is trying to negotiate, not necessarily going to go for his initial offers on things that he's willing to modify them if the signs on the ground are that what he initially goes for is too high.
Yesterday, Kathleen, I also spoke to the EU Economy Commissioner, Paolo Gentiloni, about the need for digital tax alongside a corporate tax.
Yes, and that has been a big issue that, goes back obviously through the Trump administration. It's been an issue that's tried to be, that the U.S. and European Union officials have been working on negotiating, and one that I think that, is going to be on Biden's plate. I think it's something to watch very, very closely as they go to the G7 in a few weeks now. That's going to happen in Cornwall in the UK, and I think that's going to be an issue that really is going to be significant to watch how Biden plays that when he goes to the G7 for sure.
Kathleen, just so that everybody understands, is it two different things? One is the minimum global taxation, and the other one is basically, a digital tax. Everything, I guess, needs to be aligned for it to make a real difference for companies not to find loopholes.
Oh, absolutely, and that kind of underscores, there are two different things, and that kind of underscores the difficulty that the Biden administration, and other officials are facing, as they try to negotiate some sort of global tax scheme, is that all of these pieces have to fall into place at once. And again, as we discussed, the backdrop of this is that Biden is also embroiled in domestic negotiations about his economic plan, and that, is something that also has to kind of fit within that rubric. So it's a really tricky thing right now for U.S. officials to try to comprehend.
Kathleen, thank you so much. Kathleen Hunter, there, our DC editor. Now we'll have plenty more, of course, on the global taxation story throughout the day. Now, scenes of jubilation across Gaza and the West Bank as Israel and Hamas halt an 11-day conflict. Joe Biden says the U.S. will continue its, quote, quiet, relentless diplomacy. Up next, we discuss all of that with our international government executive editor. She's Roz Matheson, and she's coming up shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Israel and Hamas have agreed to an Egyptian-brokered ceasefire, sparking celebrations across Gaza and the West Bank. The 11-day conflict has left more than 200 dead. U.S. President Joe Biden has praised the truce, which came amid growing international pressure to end a barrage of airstrikes from both sides.
I believe the Palestinians and Israelis equally deserve to live safely and securely and to enjoy equal measures of freedom, prosperity, and democracy. My administration will continue our quiet, relentless diplomacy toward that end.
Now, for more, we're joined by Bloomberg's international government executive editor, Roz Matheson. Roz, what are the next steps now that the ceasefire has actually taken effect?
So it's still very new. It only took effect a couple of hours ago, into scenes of jubilation on both sides, celebrations both in Gaza and in Israel. This morning, the question is, how do you now make it stick? Because it's coming out of 11 days of nightly barrages, and does each side have enough incentive for it to stick? Both on the Israeli side, for the Prime Minister, does he feel he's done enough to degrade Hamas's military capability, its infrastructure, its commanders? And does Hamas in turn feel it's got what it sought out of this and perhaps established itself as more of a leading voice for the Palestinian people in the region? So the challenge for the mediators, which is primarily the Egyptians in this case negotiating with both sides, is, are there systems in place to support the ceasefire against the many vested interests who perhaps will try and poke a hole in it? Are there mechanisms for communication if you get isolated incidents, perhaps Lebanon sending further rockets into the area or some such, that ensures that the ceasefire holds up against that, because it's still very new and it's still very fragile. That said, there is equally an incentive at this point for both sides to make sure that it does indeed stick.
So, Roz, what's the real risk of fighting actually breaking out again, not shortly, but soon?
Very much so, because Israel and Hamas have already fought 3 inconclusive wars in the past. We've had this most recent conflict, and the longer-running, more complex issues that underpin all of this won't go away just because there's a ceasefire. You've got long-running disputes over territory, homelands, rights to housing, and so on. And you've had, in all of this, very intense communal violence in the mixed quarters of Jerusalem, and getting that to sort of taper off as well is a key question. So a lot of complicated problems still in the mix. And so while tensions may be dialed down temporarily, the question is, will that last? Because there's no framework at the moment for a broader peacekeeping process.
Roz, thanks so much. Rosalind Matheson, there, our executive editor for international government. Now, we're also looking at what's happening in Lisbon. This is where EU finance ministers are meeting. The German finance minister, Olaf Scholz, speaking right now. I think he's speaking in German. Our Maria today is, of course, standing by, listening to what he says, especially if he breaks out in English. We'll take that live. He's saying that the U.S. 15% tax proposal is a big step forward. Again, he says that it looks like we'll have a tax proposal in the summer. Again, if you think about it, back in April, the U.S. was proposing 21%. Now it's a 15%. So it does look like, even if it's less ambitious, it's more likely to get consensus. Onto the markets, and it's been a wild week for crypto investors. Elon Musk and the PBOC knocked Bitcoin prices by a third. The digital currency staged a recovery. Not even President Biden's proposal that crypto transaction of a certain size will need to be reported to the IRS has halted that. Now, prices have since held around $40,000. Joining us now is Tu Lan Nguyen, Commerzbank FX strategist. Tu Lan, thank you so much, as always, for joining us. We'll get on to inflation expectations, dollar in a second. But what do you do with crypto right now as an FX strategist? Do you do anything?
Well, obviously, we're observing it because it is just the hype on the markets at the moment. But in all honesty, I mean, we look at it as any other speculative object there's out there. We don't see value in cryptocurrencies, at least in their current form, as money, as classical money, or as a means of transaction. So that's why, from a fundamental point of view, we don't put a lot of weight on cryptocurrencies. I mean, that may change. There's a lot of innovation happening in this area. So maybe at some point, the technical issues that we have in many cryptocurrencies will be solved at some point. So that's why I think it's interesting to look at it and observe it. But the volatility that we're seeing at the moment, that really shows you that there are still a lot of issues here with cryptocurrencies.
Tu Lan, overall, is it something more symptomatic about volatility in asset classes? Is it symptomatic of cheap money out there, or do you just focus on the inflation debate to see what currency pairs you like?
Well, I mean, as for cryptocurrencies, I think one issue here is obviously that they are only limited in their amount, which is obviously for some people that is attractive, for some it's not. So it's more comparable to gold, although even more volatile. And as for other currencies, yes, indeed, we're focusing on the inflation debate, which is driving currencies at the moment, particularly the US dollar, because that is where the focus is on at the moment. This is where the inflation fears are highest because of the combination of ultra-expansionary monetary policy as well as expansionary fiscal monetary policy.
What happens to dollar in all of this? When you look at inflation, when you look at what we're hearing from the Fed or not hearing from the Fed and all the data coming out, is dollar stronger from here, or is there a risk that actually we have a repricing that's pretty imminent?
I think the path for dollar is not exactly clear from this point on. I think we will see quite some volatility here because high inflation per se, you cannot say if it's positive or negative for the dollar or for a currency generally, because it depends. It depends on the central bank, obviously. If we have high inflation, but a very dovish central bank, which is something that we have at the moment, that is obviously negative for the dollar. And this is why we are seeing dollar weakness. But this could turn if the market at some point expects the Fed to turn around, it become more hawkish and start to react to high inflation. And then this could turn positive for the US dollar if the market starts to expect higher real interest rates in the US. And this is something that I could imagine could happen in the next couple of months, because this is probably going to be this quarter and the next quarter is economically going to be one of the strongest in the US. And this could push a more hawkish view on the market.
Tu Lan, what do you expect actually from PBOC, and what does that mean for renminbi?
Well, the PBOC has been scaling back support for the economy somewhat because obviously the Chinese economy has already retraced the losses from the pandemic much earlier than any other big economy. And what they're now focusing on is the problems that the Chinese economy had before the pandemic. And that is structurally high debt, for example, which requires the PBOC to be more restrictive. And they're starting to rein in credit extension. And I think what we'll be seeing as well is that they might be allowing more bankruptcies in some areas of the economy. And overall, this means that the Chinese economy will be dropping back towards a weakening path. Probably growth over the medium to long term will drop to below levels that we saw before the pandemic. And all of this should weigh on the renminbi over the medium to long term.
Thanks so much, Tu Lan Nguyen, Commerzbank FX strategist. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. The number of UK cases of the coronavirus variant from India has more than doubled for a second week. Health officials are also monitoring a new mutation of the virus. It's adding fresh doubt to plans to fully unlock the economy next month. Still, the government is increasingly optimistic about the effectiveness of vaccines. More than 70% of UK adults have now had at least one dose. The European Union is backing the introduction of vaccine certificates to allow quarantine-free travel within the bloc. It's offering the region's battered tourist industry a chance to salvage the summer season. The passes will be issued free of charge in digital or paper forms. They'll offer proof the holder has been vaccinated, has recovered, or has had a recent negative test. The US is exploring how to help chip producers and buyers share supply chain information to alleviate the global supply crunch. Commerce Secretary Gina Raimondo is also urging Congress to swiftly pass legislation to fund domestic production. She convened a summit of the biggest firms affected by the crisis, including executives from Apple, Google, Ford, and General Motors. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Now coming up, Europe's road to recovery. EU finance ministers meet today as optimism about the bloc's economic rebound grows. We'll be live in Lisbon next. This is Bloomberg.
We are becoming very optimistic. We went from a very strict lockdown in the winter, very tough, intense, but now the vaccination program is working very well. The number of cases is extremely low. We're opening up already most of our economy, and the numbers remain very low. And now the tourism is back.
I believe the optimism about the prospects for the euro area are justified.
We are expecting that we can revise upward our GDP up to close to 5%. We were at 4% before, and now we're expecting much higher GDP growth.
We should be optimistic about our prospects for the second half of 2021, leading into a strong start for 2022. And therefore, I do believe it is possible that we will see further revisions in our growth expectations as we move through the year.
The Irish and Portuguese finance ministers speaking to Bloomberg's Maria Tadeo in Lisbon. Now, in the past few minutes, the German finance minister Olaf Scholz was also speaking to reporters and said that the U.S. global minimum taxation proposal is a step forward. Our Maria Tadeo was asking the questions to all of those ministers. She's there. First of all, Maria, what's the mood in Europe right now? What did the French finance minister, the German finance minister actually tell you about this taxation proposal?
Yes, and you know, Francine, we just spoke to Olaf Scholz, who said this should be a happy day for Europe. We've been pushing for this debate around taxation. This 15% is a huge step forward. We welcome that. And Olaf Scholz, in terms of the timing, he did tell me we're looking at a joint proposal by the summer. So this is a matter of weeks, and a lot of this, of course, driven by the change in the U.S. administration from President Biden. The same comments from Bruno Le Maire, the French finance minister, saying we should avoid that race to the bottom after coronavirus. So it's good that we're talking a minimum corporate taxation, not anything that means undercutting on the taxation front.
So when they talk about the recovery, are finance ministers confident that actually it's going to be better than expected initially? I think we've just lost Maria. Maybe there's a connection issue, but we also want to get back to Maria to see whether or how the technicalities will work in terms of the passporting. A shame we lost Maria, but we'll try and get her back. I mean, it's one of the first times also that our reporters are actually on the ground. Maria, if you can hear me, I wanted to ask you first of all about the recovery and then ask you about vaccines. Yeah, so how's the recovery looking? Are they pretty optimistic that they're on a better path?
Yes, you know, Francine, and again, you know, the fact that we're meeting here in person with some technical issues, but, you know, it's new. We've almost lost the habit of doing this, but it does show that, you know, Europe is gearing up to reopening. On the vaccination front, Europeans do insist that there will be something like herd immunity by the end of the summer. That's being reflected today, as you see, in European stocks and the travel stocks, too. And this deal reached yesterday on the vaccination passport could make a big difference.
I think we've lost Maria. We'll get back to Maria because one of the big things also that we've been talking about is we used to call them passports and now it's some kind of certificate. So if you're fully vaccinated, the EU is trying to find some common rules to mean that you can actually come in and then travel without the need to quarantine, or I believe also without testing, but I need to 100% check on that, whether that's indeed the case. This is one of the big things that, of course, will be discussed in Lisbon, where Maria today will be on the ground for us all day. This is what the markets are looking at. Now, our Danny Berger, birthday girl today, was going through the markets and really put the spotlight on inflation. Once again, inflation at the forefront. There is a bit more optimism today about the prospects for growth, getting a boost from strong earnings, but also an economic reading. I'm looking at treasuries, for example. They're slipping, the dollar edging higher. Gold, nothing huge, actually hovering around the highest level in more than 4 months. Bitcoin steady, so it seems like it's a confident day for now. It could move, but again, it is for the moment okay. Asian shares were mostly higher, although Chinese shares were actually lower. We'll have plenty more on the markets shortly. This is Bloomberg. Well, Biden's team backs down on tax. The U.S. president proposes a 15% minimum tax on multinational firms, lower than the 21% originally suggested. Ceasefire: Israel and Hamas agree to end an 11-day conflict in the Gaza Strip after the violence claimed more than 200 lives. And the EU backs vaccine certificates to ease cross-border travel this summer. The bloc's finance ministers meet today in Lisbon. Well, good morning, everyone. I'm Francine Lacqua in London. Welcome to Bloomberg Surveillance, the early edition on Friday, the 21st of May. So markets more calm this morning. The U.S. futures gaining, European equities, little change. Let's get a look at which individual stocks are on the move this morning with Danny Berger, our birthday girl. Danny, I'm going to at some point stop saying it, but I'm excited.
That's okay. I'll take all the attention. And, speaking of birthday, in case anyone is looking for a gift for me, it's not just Dogecoin. Richemont happens to be doing well because their jewelry sales are really well. Maybe people are, getting ready to give me some gifts. But anyway, so Richemont had its earnings today. And yes, it was jewelry that really carried it through. Jeffrey's calling the results of that sector impressive, outstanding. And it really just bodes well for Richemont for the rest of the year, especially when travel comes back and people are spending more as they're going on holidays. Travis Perkins off a bit of its highs this morning, but it is gaining. It sold its plumbing business to HIG for a little bit more than $460 million. Analysts at Peel Hunt saying that this allows Travis Perkins to really focus in on their core business. Also looking at the biggest loser today, and that's Lufthansa. It's been hit because its biggest private holder, that's KB Holdings, they own about 12% of Lufthansa, or rather I should say they did hold 12%. They've sold about half of their holdings at a pretty steep discount, so that in turn is sending the airline down by more than 6%, Francine.
Yeah, I'm just trying to figure out, Danny, whether you're more of a Cartier girl or, I'm looking at some of the brands that Richemont has. Van Cleef, Mamia, Bont Blanc.
I don't discriminate.
You're not fussy. There you go.
I'm not fussy.
Thank you. Danny Berger there with the very latest on the markets. Now, the dusty world of central banking may feel a far cry from the sound and fury of the cryptocurrency mayhem currently consuming markets, well, especially if it comes to memes. But our next guest argues that radical changes to banking are coming sooner than you might think. Writing for Bloomberg Opinion, Hugh Van Stine says that while digital pounds, euros, and dollars may be years away, the real action will be in marking wholesale markets and cross-border transactions more efficient. Well, I'm delighted to be joined by Hugh Van Stine. He is UBS Senior Advisor to the Chief Executive Officer and former Senior Advisor to the BOE Governor Mark Carney. So, Hugh, as always, thank you so much for coming on. I love having you on, especially on wild weeks when we talk about crypto, because you understand that crossroad between what central banks have been trying to do on the digital currency space and crypto. Where does it come, when does it come at the forefront, actually?
Well, Francine, thanks for having me on. Look, I think it's a really tough question, and I'm sure every central banker is thinking this week, what does this mean for me? So 9 out of 10 central banks are already doing pilots or studies. And as we saw yesterday, the Fed is going to be adding to that in terms of doing their own study. But where will they go? And I think the challenge for them is, change normally in central banking happens in the small markets first, which allows the larger markets to learn. So actually, there's a lot of focus on the Bahamas, Cambodia, St. Kitts, all fantastic places to go on holiday to visit. But I don't think it's the retail side which is where it's really at. I think for central banks, they're really cautious about opening up their vaults to a much wider range of businesses or financials. So the work they're really doing is around wholesale markets. And I was really struck that when the Bank of England announced with the Treasury that it's setting up a central bank digital currency task force, what was not noticed was they were also saying we're going to open up the Bank of England systems to a wholesale payment player. And I think it's in the wholesale markets we're going to see most of the action. Whereas retail, I think it's going to take longer. And Francine, coming back to you, I think the really big, interesting challenge for the crypto community is this. If it's going to take another 5 to 10 years for central banks to decide on what they're doing about retail central bank digital currencies, even Sweden's saying it won't be till 2026, that leaves a long runway for the private sector to make the running. And I think that's what a lot of the payment firms and some of the stablecoin providers are really excited by.
But so first of all, are there any pilot schemes out there that you would be watching out for on central banks to give us an indication of what happens?
Yeah, so Francine, so there's 2 blocks. In the wholesale markets, there's 2. There's one in Singapore. There's a syndicate called Patria, which 2 banks and the Singaporean Sovereign Wealth Fund are doing. And that's about digitizing central bank money for cross-border payments. And another one in the UK, which is this opening up an omnibus account, which could be as live as early as next year. And I think that, for me, that's a synthetic digital currency, which could even be here by next Christmas. So I think these are the 2 I would really focus on. In the retail area, I mean, we should, Francine, for one of your trips, you should definitely go to St. Kitts and Bahamas on a fact-finding mission on retail central bank currencies.
Prime research material, absolutely, and maybe stay for 2 or 3 months. When you look at what happened to the digital yuan, so there was something on it, I think about 10 days ago, and it didn't quite have the oomph that they were expecting. I mean, how do you see PBOC? Is it a way also for PBOC, and this is what for example, Neil Ferguson was saying, is it a way the digital yuan to actually also really rival the dollar longer term?
Yeah, well, look, I think this is a really interesting thing. So I think where Neil's got it right, this pilot is incredible in terms of its scale and in terms of the reach. And obviously, I think that the central bank there is really trying to digitize as much of the domestic transactions. And at this stage, there isn't a layer for international transactions. However, of course, where Neil's thinking is, where could that go next? I still suspect that digitizing a domestic market, particularly the size of China, is a really long-term project. And so I'm not as worried that simply digitizing a currency transforms the choice of a reserve currency, or equally the dominant currency for international trade is the dollars. And I still think, again, that's going to be a long-term running. But making cross-border transactions more efficient and more effective is where pretty much every central bank is focused.
You argue that basically, Bitcoin, some of these cryptocurrencies have a couple of years to run because they won't be rivaled straight away by some of the central bank things out there. But will they be regulated by central banks or other institutions?
Well, look. So first, is it really a currency or is it a crypto asset? I mean, I think in the States they've clearly decided it's a commodity. I think that there will continue to be focus on this. I mean, for use of payments, it's not that efficient. I mean, we've seen with a 25% fall this week alone, it's not great. I mean, going back to where Danny was discussing, take mail order fashion, 40% of all clothes are returned. Who would decide whether you paid the Bitcoin when you first purchased it or when it came out? So as a use for payments, it's not really there. But obviously, if it's an asset, then naturally the regulators will want to make sure they get paid taxes and capital gains on it. And equally, if it is being used for payments, but folk want to know that if it's more than $10,000, just like with banks, that money is followed. So I think it is going to be increasingly brought within the regulatory fold, but that doesn't mean there isn't an opportunity for the technology. Where I think the interesting point is, particularly with stable coins, we can tokenize money and send it in a very efficient and secure way. And I think it's that technology piece which is interesting, independent of what the price of Bitcoin may be yesterday, today, or tomorrow.
Thank you so much, Hugh. Hugh Van Steen is there, UBS Senior Advisor to the Chief Executive and former Senior Advisor to the Bank of England Governor Mark Carney. Now, coming up, pharmaceutical company Oxford Cannabinoid Technologies, which is backed by rapper Snoop Dogg, is set to list on the London Stock Exchange today. We speak to the Executive Chairman and co-founder, Neil Mahapatra, next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg First Word News, or actually Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Morgan Stanley's chief executive has unveiled his biggest leadership change in over a decade, with a slate of potential successors that mostly resemble the old guard. Just days after JP Morgan pushed two women toward the front of the field to succeed Jamie Dimon, Morgan Stanley's top picks are all white and male. The bank says it's committed to developing and promoting diverse talent at all levels. Ford is considering divesting its spin e-scooter sharing service. Bloomberg understands the US carmaker is examining options, including a sale or spin-off of the business, which it acquired in 2018. The company operates dockless electric scooters on campuses and cities in North America and Europe. Lufthansa's largest private shareholder sold more than half its stake in the airline. The Thiel family disposed of 33 million shares just 3 months after the death of the family's billionaire patriarch. He'd built up a stake of about 12% in the carrier. The family remains the largest private owner and second overall after the German government. And that's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, Oxford Cannabinoid Technologies, known as OCT, is a London-based pharmaceutical company which develops cannabinoid-based prescription medicine. Now, it counts tobacco giant Imperial Brands and rapper Snoop Dogg amongst its investors and is set to start trading on the London Stock Exchange today. The firm has raised $23 million from wealthy individuals and institutional investors. A number of medical marijuana companies have listed in the UK this year, but OCT is looking to set itself apart from the others by stressing its pharmaceuticals roots. Well, joining us now is Neil Mahapatra. He's Oxford Cannabinoid Technologies Executive Chairman and co-founder. Neil, thank you so much for joining us, and congratulations. I know it's a big day for you and the company. Why did you decide to list here in London?
Well, thank you very much for the opportunity to speak. We chose London because we're a British company, and I think London is now open for cannabis companies, but our DNA being both based in London and Oxford is very British. So the London Stock Exchange main market seemed the right place to do it. And we're incredibly fortunate to have raised £16.5 million.
And I know, Neil, you're very focused, of course, on the pharmaceutical aspect to this. And I know in the past you've tried to say that you wanted to replicate also the success of GW Pharma. How do you see that path going?
Well, yes. I mean, yes, we're a cannabis firm. We're a medical cannabis firm, and we work with cannabis and cannabinoids. But we do that through the pharmaceutical development channels that have been around for decades, of phase 1, phase 2, and phase 3 clinical trials. And that's the way we feel that you really get the confidence of the medical community behind you to prescribe cannabinoid-based medication, which has huge potential. There's massive potential in the plant, but they only prescribe it with confidence if you go through these existing channels. And GW is really our key comparable. They've done that for many, many years now, and they were bought for $7.5 billion, or just over $7 billion a few months ago. And so that's the type of success that we're looking to emulate, and it's by pursuing cannabis development through pharmaceutical channels that we think you really do get success in the cannabis market.
So do you expect to see more medical marijuana listings in London?
I expect so. I think London has been incredibly forward-thinking and now opening up the right type of professionally run medical cannabis firms. And it's good news for the market. We're a center of finance of the world, and it just seems only natural to now open up the London Stock Exchange for cannabis companies.
I mean, could it actually become, a couple of years ago, it was all about Toronto or Canada for some of these listings. Do you think that the UK could become that pocket now?
I hope so. I think the London Stock Exchange has, it's one of the oldest exchanges in the world, but it's also one of the most forward-thinking. And now that cannabis is going global, And it's not just about North American companies, it's about UK companies such as us and about European and Asian companies. I think London is poised to be a real potential hub for cannabis listings, medical cannabis listings going forward.
Give me a sense of what you think, Neil, would have to change for some of this, cannabis-derived medication to become more mainstream.
I think the key is to get to generate data. It's to get the confidence of the medical community that this plant, this amazing plant that has so many different cannabinoids, both major and minor, in it, to get the confidence that there's huge medical potential there. And the way to do that is to generate classic pharmaceutical data, randomized controlled trials, and work with the cannabis plant, as we do at OCT, but taking them through these pharma channels of development to really build that confidence up in the medical community. Once you've got that confidence amongst doctors, then I think we're very much on the way to mainstream acceptance of the medical power of cannabis and cannabinoids, which has the potential to be absolutely huge, as GW's multi-billion acquisition shows.
How big do you think it can be? So, if you give me a sense of size and scope, how big is it now, and how big will it be in 5 years and then 10 years?
Well, so I think if you look at just what we're looking to do, which is take cannabis-based medications addressing the pain markets, given the opioid crisis and the backdrop that has. That alone is a 40 billion pound and over 40 billion pound pain market. And so, but cannabis and cannabinoids have the potential to work not just in pain. GW focuses a lot on neurological conditions. Jazz Pharma focuses on neurological conditions. There's a huge amount of other indications in the pharma industry that cannabis can really address and really have a massive benefit for people across the world. So it has the opportunity to be multi-hundred billions, this market. And then hopefully we will be one of the companies that can kind of capture some of that share.
Neil, when you look at, I guess, some of the barriers to entry, again, what makes a successful company in this space and others, won't be so successful? What will differentiate OCT compared to the others?
I think it's about quality of management team and support of institutional shareholders. So our team is incredibly professional, led by a seasoned pharma exec with 2 decades of pharma experience. And the rest of the team around him are very, very high quality from previously working in mainstream industries. I think both with FTSE 100 Imperial Brands in our shareholder base, it's ensured that we've had to do everything to not just above board standards, but to those high FTSE 100 standards of reporting and compliance. And I think the cannabis market is such that there's a massive tailwind to it, and it's a bit of an open door. But how you differentiate yourself versus other cannabis companies is through quality of management team. I really believe that, and I think we're well positioned in that regard.
How helpful is it actually to be backed by a name like Snoop Dogg, because it grabs people's attention?
So I've never met Snoop Dogg, but we have been incredibly supported by his investment firm, Casa Verde Capital, that invests in cannabis companies all over the world, and they've been so helpful. The managing partner, Karen Wadera, and the other partner, Yoni Meyer, have been incredibly supportive since their investment in 2018. And so from that perspective, brilliantly helpful. We've had access to their network, to their expertise, to their board guidance, and it's been a massive benefit to us.
Thank you so much, Neil Mahapatra. They're Oxford Cannabinoid Technologies Executive Chairman and Co-founder. I hope I'm saying it correctly. Is it cannabinoid? Or
Cannabinoid. You're saying it absolutely correctly. Absolutely.
All right. As it's getting more mainstream, we have to get the pronunciation on the right side. Neil, thank you so much for joining us today. Now, Credit Suisse considers retention bonuses to stem the flight of talent. Morgan Stanley presents an all-male cast to succeed Chief Executive James Gorman. Up next, we discuss the talent pipeline at the world's biggest banks. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Morgan Stanley Chief Executive James Gorman shakes up the bank's leadership by positioning a group of 4 men as his most likely successors. Ted Pick and Andy Saperstein emerge as co-presidents and likeliest people to take over as chief executive. Now, James Gorman has told the board that the plans to remain chief executive for at least 3 more years. But the all-male, all-white executive shake-up at Morgan Stanley may look all too familiar to some. Well, Bloomberg Opinion's Elisa Martinuzzi has written a piece entitled "Morgan Stanley Didn't Get the Diversity Memo," and you can read it in full on OPIN Go. I've also pushed it out on social media, and we're joined by Elisa. Elisa, it's a great piece, and it's actually funny and tragic at the same time. But what does it actually say about the bank's talent pipeline?
Well, I think this is the point that I'm trying to make is, clearly the lineup for this next round is what it is, right? I mean, there are, at the moment, there are only 4 white men that are, in a position with the credibility and the experience under their belt to be taking on that position. But what I've really tried to sort of look at is, the future pipeline. And that's where I think there are questions to answer, because it doesn't seem like there's much really changing in the future generation. So if you look at the operating committee, which is the highest body of management at Morgan Stanley, well, that committee is still dominated very much by white men. And even the next level of management, you have, more than 60% of the individuals on that committee are white men. So I think there is clearly, it is what it is where they are today, but, the pressure to look to do more in terms of bringing up a diverse leadership will intensify in the years to come while James Gorman remains in his position.
Elisa, I mean, I have a number of stories to ask you about, but Credit Suisse is also considering retention bonuses. I mean, they're struggling for a number of reasons, including, I guess, Archegos and reputational damage. But will it be enough to retain key talent?
Well, that's a difficult one. Clearly, there has been quite an extensive exodus already, right across the globe, in the US and in Australia. And this is often what happens is that the companies will respond and try to stem the outflow. There is a new chairman. He just started a few weeks back, who will be setting a different tone for the organization, and it'll really be quite key for him to send the right message to the staff he wants to keep, that they will be looked after, they will have the opportunity to excel. I mean, the big question really is, if you have a business that is likely to be reining in risk and going through, an introspection to find out, what works or what doesn't work, the concern is that individuals will feel that they're not going to have the opportunity to shine for a long time to come.
Elisa, thank you so much. As always, Bloomberg Opinion's Elisa Martinuzzi. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz is in New York. We'll, of course, look at the markets. We'll have other stories as well. We'll look at the conflict in Gaza. We'll look at whether the truce will hold. The other big stories, of course, is global taxation story. So our very own Maria today was in Lisbon, where EU finance ministers are meeting. The U.S. late last night actually floating this 15% corporate tax idea. That's less than the 21% rate it had proposed for the overseas earnings of U.S. businesses. But it could be a way of actually getting consensus and rallying the troops. So we'll have plenty more on that. This is Bloomberg. Good morning from London, Berlin, and New York on this Friday, May 21st. Our top stories today. Biden's bold tax bid, well, he's calling for a global minimum corporate tax of just 15%. That's less than what he wants American companies to pay on their overseas earnings. The fighting stops for now as ceasefire ends the 11-day conflict between Israel and Hamas militants, but the truce doesn't address the root causes of the violence. And the European Union tries to save summer. Negotiators have agreed on vaccine certificates that could boost holiday travel. Now, our top 3 stories, Kailey, I know there will be a lot of focus on whether especially Americans can actually travel here to Europe and then travel around the countries. Different, of course, if you're in the UK because they're no longer part of the European Union. On the markets, it's all about inflation, but it looks like it's quite a positive day.
Yeah, I'll try really hard to focus on the markets, Francine, but really I'm thinking about Ireland because I'm supposed to fly into Belfast, Northern Ireland. Brexit and vaccine passports really complicating the situation for me. But as far as the markets goes, it was a bit of a mixed session in Asia. We did have Japanese stocks higher quarter, but Chinese stocks underperformed. They were down about 1%. And Taiwan stocks were Hong Kong stocks were under a little bit of pressure as well. The big drag within the Hang Seng was Tencent. It reported results overnight. Solid first quarter, but the company said it's planning to invest more, and that could weigh on profit going forward. So those shares were down about 3.4%. In foreign exchange, I would note the Aussie dollar is the big underperformer in the G10 space, weaker against the US dollar by about 0.3%. And that has everything to do with the continued declines we are seeing in commodities. Take iron ore, for example. Futures in Singapore down 4.5%. Second consecutive weekly loss, which is the first time that's happened in about 2 months. A lot of concern about China cracking down on that rally. As for what the picture looks like here in the U.S., big tech did lead some pretty solid gains for U.S. equities yesterday, and we're seeing just a touch of continued buying this morning. S&P 500 futures up about 8 points. In the Treasury market, we saw yields creeping down yesterday. We are unchanged at that 1.62% level, and I wanted to point out gold as well because it is snapping a 6-day winning streak. Futures down about 0.2% to $1,880 or so an ounce. And then, of course, there's an asset that some people say may be competing with gold, a digital gold. Bitcoin has seen a very difficult week, down about 9% over the last 5 days. This morning, though, some stabilization right around that $40,000 level. But man, what a week, Matt.
Yeah, it was insane. By the way, Kailey, I'm thinking a lot about Ireland today, too. But not because I'm going there. I think it's fascinating that the Biden administration wants to raise the global minimum tax above what Ireland charges Apple and Microsoft. And it's not like they don't know what they're doing, right? Shouldn't they have some autonomy in their tax policy? In terms of their stock market right now, they're up. Take a look at this map. You can see we're showing gains mostly across Europe. The UK right now down, but everything else is rising. If you look at the dollar, as you showed us, it's rising. So we're seeing a drop in the euro. We're seeing a drop in the pound. The German 10-year is getting now further away from zero, as it had been approaching the positive rate over the past couple of days. Didn't quite get there. And then Lufthansa, I think, really interesting today, as Lufthansa's biggest private owner sells half of its stake. Heinz-Hermann Thiele's family or the estate sold 33 million shares at €9.80 a piece. And as you can see, the shares are down big, Fran.
Yeah, breaking news. You and I, Matt, will actually have, a heated discussion probably on taxes. I can't wait for it. We can't do it right now, but it will be, it'll happen shortly.
I'm excited.
Let's first of all look at what's ahead today. Euro area finance ministers and central bank chiefs are meeting today in Lisbon. Then later at 9:45 a.m. New York time, we will have the U.S. manufacturing and services PMIs. Apple chief executive Tim Cook testifies today in a trial with Epic Games. And finally, President Joe Biden will meet his South Korean counterpart, President Moon Jae-in, at the White House today. Matt, on taxes, so I mean, a couple of things. First of all, yesterday the proposal from Treasury of a corporation tax of 15% is far below what we had heard in April, which was 21%. So you could argue, look, 15%, you rally the troops and it gets it behind. But what you don't want is exactly, countries to lowball so that they attract business without paying proper taxes, which is why you have to have a uniform global level.
But why? Who gets to decide what proper taxes are? Why can't Ireland say, we think 12% is a proper rate? And I mean, I'm not even clear on why corporations have to pay taxes in the first place. The owners pay taxes on dividends and capital gains. The workers pay taxes on their income, on their wage income. Why does another shell of tax have to be added to it? And why does the U.S. get to decide what it is for the world?
Well, I mean, first of all, I think, but we'll get into it a lot deeper, is that if you don't have a minimum corporate level, then it's a race to the bottom. And it's, it's like trade wars, it's like currency wars. As soon as there's a trade to the bottom, a lot of people lose out. But the idea is that they all agree together, right? So you find consensus, and that's the only way to do it, which is why they've tried to do it for a decade, and it's been so difficult at the OECD level. So let's get more on the global tax proposal from Bloomberg's U.S. political editor, our Kathleen Hunter. Kathleen, first of all, 15% instead of 21%. Is that just to try and get everyone on side?
I think it's a recognition that 21% was overshooting the mark. I mean, I think there's a real sense that, the Biden administration is signaling, and we've seen that in how this has been received from different finance ministers across Europe, especially, that, this is an effort to try to get a deal on something and try to negotiate rather than shooting too high at the beginning. And I think that's what the Biden administration is really signaling here.
Let's talk about something else from international affairs, Kathleen. A lot of international efforts have been focused on the ceasefire between Israel and Hamas. We, of course, heard from President Biden after that Egyptian brokered truce was announced. Take a listen.
In my conversation with President Netanyahu, I commended him for the decision to bring the current hostilities to a close within less than 11 days. I also emphasized what I've said throughout this conflict. The United States fully supports Israel's right to defend itself against indiscriminate rocket attacks from Hamas and other Gaza-based terrorist groups that have taken the lives of innocent civilians in Israel.
So, Kathleen, the ceasefire may put an end to the violence for now, but it doesn't get to the root cause of the conflict. Will the Biden administration take a more active role in preventing that kind of violence going forward?
Well, I think that it's important to remember that even during the last 11 days, while this conflict was going on, what we heard really primarily from the Biden administration was a desire to emphasize that they are working in, sort of what they've described as quiet diplomacy behind the scenes. And so I think that, that's what we should expect to continue. Obviously, Biden is under pressure domestically from his left flank. The progressives in the U.S. want to see potentially a harder line against Israel. So I would imagine that going forward, there will be U.S. efforts, but that they're going to be a little bit below the radar.
All right, Kathleen, thanks so much for joining us. Kathleen Hunter, our U.S. politics editor, on a couple of the really biggest stories that we're following today. Another one, as Francine and Kailey were talking about at the top, tourism in Europe is getting a chance to salvage this summer. EU negotiators have agreed on vaccine certificates that will allow quarantine-free travel within the bloc. Bloomberg's Maria Tadeo joins us from Lisbon on vaccine passports. So how are they going to work, Maria?
Well, Matt, the idea is that you can download on your phone an app, and with that you could show that you've been vaccinated, that you've already had coronavirus, or that you have tested negative, and that should mean that you could enter the European Union, and in particular, I'm sure the southern European countries ahead of the summer, and do it in a way that's quick. Now, the thinking for this is that last year the rules were so difficult and so complicated that no one was able to book a holiday. If you do it this way, it's the same rules for everyone. You streamline the process, and that could mean that tourism could pick up this year. At least that is the goal, and it's something the finance ministers are now debating here in Lisbon, meeting for the first time, by the way, since September. I do want to say, Matt, and just alluding to your previous conversation, the other big topic here is that minimum corporate tax proposal put forward by President Biden. And I have to say, I spoke to the German finance minister, Olaf Scholz, and he told me this is great news. This is a good day for Europe. And he said this is the best chance we've ever had to get a comprehensive tax deal on this. We're talking about a proposal that could come in the next few weeks.
All right, Bloomberg's Maria Tadeo in Lisbon covering that Eurogroup meeting for us all day long. Thank you so much. I do want to take a look at some stocks moving in pre-market trading here in the U.S. Now, Maria was just talking about the travel rules in the EU, and we are seeing a number of U.S.-oriented travel companies moving higher in pre-market trading, one of them being United Airlines, up about 0.75%. Not necessarily air travel, but maybe space travel. Another stock moving to the upside is Space, the ticker Virgin Galactic, which, of course, is Richard Branson's space exploration company. It confirmed yesterday it will have a test flight tomorrow. That saw the stock up 14% in the Thursday session. It's higher by another 6% this morning, and an upgrade from UBS may be adding to that positive sentiment. Speaking of positive sentiment, Oatly saw a very warm welcome to the public markets yesterday, rallied 18% in its trading debut. It's up another 12% in early hours, Francine, and I think we have to give Matt Miller a bit of a homework assignment to go out and try some oat milk over the weekend, Francine.
And look at tax regimes.
And
Matt, I have to say, no, just very quickly, Matt, the thing you said about, why do corporations pay taxes? Why do corporations pay taxes? I mean, the idea is that if governments don't have a treasure trove, then they can't actually address inequality or climate change. So there is a kind of, in the Western world and everywhere, an assumption that government, whether it's big government or smaller government, just needs a bit of money to make society a little bit fairer.
So you're just saying they want to add on another layer of taxes, and that's a good place to do it?
Well, in some, actually, it could actually go down, right? But the idea is that everyone's equal. We'll have plenty more debate coming up this hour.
But people already pay taxes on that money. You already pay taxes on those profits. You already pay taxes on those wages. Why
but not on revenue.
add another layer?
But it's happening at the moment. Corporation tax. I mean, we'll get into it, and we'll look also at some of the big tech and how much they're paying compared to some of the older school companies. Coming up, Maya Bhandari, Columbia Threadneedle multi-asset portfolio manager. And then a little bit later, we'll also speak to the IMF managing director, Kristalina Georgieva. That's at 12 p.m. in New York, 5 p.m. in London. And this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller here in Berlin with Francine Lacqua in London and Kailey Leinz in New York. I'm the only capitalist on this show. I think that could be.
No, there's capitalism, and then there's like extreme capitalism, and then there's like no safety line for anyone in the world.
Oh, okay. So it's about safety nets. Got it. What I want to talk about is inflation first and foremost, because we saw the Philly Fed inflation index rise to a 40-year high. I've got a chart showing that here that I believe my producer Daniel Curtis threw together for us. You can see that there are two white lines, and if you're listening on radio, you can't see that. There are two lines, one white, which is current inflation, and one blue, which is expected inflation in 6 months. And the interesting thing, this is where those of you on radio are at a slight disadvantage, is that the blue line comes down slightly at the end. So the expectations for prices 6 months out are actually easing a little bit, and this could play into that transitory argument that the Fed has been making. Nonetheless, the prices that we're looking at now, at least according to the Philly Fed survey, Fran, are at a 40-year high.
40-year high. Let's get straight to Maya Bhandari, multi-asset portfolio manager at Columbia Threadneedle, to look at some of the price surveys. And Maya, overall, it just goes back to whether we see rampant inflation or not.
Good morning. Yes, I mean, as Matt just pointed out, it really is expectations, I think, that matter. I mean, in the short term, inflation, as we've already seen, has picked up quite meaningfully. And, our expectation is that inflation will be both higher and increasingly volatile over the course of this year, both in the U.S., but also, frankly, in Europe, as things like the German VAT cut rolls off. And I guess furthermore, in the shorter term, the inability of supply to keep up with demand, whether we look at semis or more broadly as huge domestic savings are spent, will be a challenge for inflation readings. But our view is that inflation rises will be transitory. I realize that's quite a consensus view, but that is the view that we have, and that the Fed will look through rises in inflation in keeping with its own flexible inflation targeting. But I think those longer-term expectations will be really key to watch, because that will be worrying if they start picking up.
Yeah, they certainly will. Maya, where do you see the biggest value? I know you're looking at Japanese equities and U.S. equities.
Well, in equity markets, we like Japanese markets, we like Asian markets, we like the U.S. Market. I guess Asia and Japan more broadly have been a bit softer than we might have expected. Participated less in some of that equity market strength, given they're very cyclical equity indices that we would expect it to really benefit from some of the strength we're seeing across the world. To our minds, those are the reasons for its underperformance, if you will, have been very specific and idiosyncratic. In Japan, for example, a state of emergency and some domestic flows. But broadly, we see the earnings season has been really quite strong across all three of those areas. I mean, now in the U.S., for example, the strength has been really pretty astonishing. I mean, earnings have grown by more than twice the punchy 25% that was expected at 50% year on year. Unusually, analysts are marking up their forecasts as the quarter progressed rather than marking forecasts down.
Right.
And I guess, as in the last quarter, the markets have used this reporting season more broadly as an opportunity to post modest total return gains, but also to de-rate. And I guess that's sort of in keeping with what we've seen in recent seasons too.
We're
sort of
seeing
see
much
upside
lower
risk to earnings.
valuations in terms of much lower valuations in terms of UK stocks especially, but also Asia Pacific and European stocks compared to the S&P 500. And we've heard a lot of people rotating into, say, European cyclicals. Do you think that's the right play?
Well, I mean, I think European cyclicals have certainly done very well. As I just reflected, I think from our perspective, we are sort of targeting, if you will, our cyclical exposure in Columbia Threadneedle asset allocation at areas like Asia and Japan, where, not only do we have really good earnings expected to come through this year and next year. But don't forget, we had really punchy positive earnings growth delivered last year too. So if you look at the price of, if you look at the PE you're paying for sort of the compounded earnings growth that you're getting, Asia and Japan, to our minds, are stronger investment cases right now.
Maya, we've heard from a growing chorus of strategists that we're peaking now, that the second quarter is the best it's going to get, and therefore it might be time to start pulling back on risk. Is that narrative wrong?
Well, I think that's certainly the right narrative in terms of economic growth. I think, most folk, including us, expect economic growth to peak in the current quarter. But, of course, as we know, economies aren't markets. And I think for financial markets, and when we look at the earnings trajectory, as I reflected a moment ago, the expectations have actually been rising, so not pointing to the peak in the current quarter, but actually sort of an acceleration through the year. So if we look at the year as a whole for the U.S., for example, the analyst community is expecting, I think, something like 33% earnings growth, and at Columbia Threadneedle, we would perhaps point to some upside risk to that forecast. So no, I guess it's a short answer. We don't think we're at sort of peak earnings momentum here.
All right, very interesting stuff. Maya, thanks so much for joining us. Maya Bhandari there, multi-asset portfolio manager at Columbia Threadneedle, says we're not at peak earnings yet. Coming up, it's our final day of the Bloomberg Business Week conference. We're going to speak with the Glossier founder Emily Weiss, AB InBev CEO Carlos Brito, Villa One Tequila co-founder Nick Jonas. That's all starting at 10 a.m. in New York, 3 p.m. in London. This is Bloomberg.
Well, this is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg First Word News. And the Biden administration is looking at ways to alleviate the global shortage of semiconductors. The Commerce Secretary Gina Raimondo convened a meeting of executives from companies affected by the shortage: chip makers, automakers, and tech giants. Producers and buyers could end up sharing supply chain information. Now, the Federal Reserve is now looking into a digital dollar. The chairman, Jay Powell, says a central bank will publish a research paper and seek public comment on digital currencies. The focus will be on how a digital dollar could improve an already safe system. China's already moving ahead with a digital yuan. And Credit Suisse, more fallout from the collapse of hedge fund Archegos Capital. Senior banker Tim McTharrar is leaving the Swiss lender and is going to rival UBS. He'll run the telecom, media, and tech advisory team in Sydney. There's been an exit of talent from Credit Suisse in the wake of debacles involving Archegos and Greensill Capital. And more than 25 years later, well, the BBC has apologized for a tell-all interview by the late Princess Diana. An inquiry concluded that the BBC reporter Martin Bashir deceived Diana's brother to obtain the interview. The probe faulted BBC management for covering up Bashir's conduct. That included creating fake bank statements. And I have to say, yesterday, for one of the first time in almost, as far as I can remember, we had a public statement by Prince William saying that, the BBC didn't do enough to protect his mother, and that then soured relationships with the royal family. That was a pretty scathing attack. And again, from royals that usually are pretty tight-lipped.
Yeah, it is it seems like the allegations are pretty awful, you know, and if that's true that Martin Bashir did that, I don't know what the involvement of the BBC was, but it just is not nice. And having, you know, people in my family who are pretty obsessive about the royals and Princess Diana, she had a really rough time of it from the documentaries that I've seen, and this just adds to all the problems she had to deal with.
Yeah, we'll have plenty more, of course, on that. We'll also look at the global economy with Dennis Snauer, president of Global Solutions Initiative. This is Bloomberg. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, there's quite a lot going on in the markets. Matt, a little bit of an easier day in terms of market volatility. The focus still on inflation expectations.
Yeah, inflation expectations. And, you know, tied to that, Francine, is this labor crunch that we're witnessing in the U.S. and we're expecting to be maybe even worse in Europe amidst the reopening. There just aren't enough people to fill the job openings in the U.S. Maybe they're not coming in because of extended unemployment benefits. Maybe there are other reasons, for example, concerns that there aren't the kind of skilled workers that are needed for the new economy jobs that are being offered. But in any case, it could be worse in Europe than it is in the U.S. because, of course, the unemployment benefits in the U.S. are set to end at some point, whereas here in Europe, they're much longer and more generous.
Yeah, of course, that would lead to inflation because you have to pay people more to get them back in the workforce. Kailey, how's it playing out in the markets?
Well, it's a relatively quiet day in the markets, Francine. One thing I would add to what Matt just said is we are seeing several Republican states now scrapping that extra $300 a week in unemployment benefits for that exact reason, the labor shortage. It's being blamed as contributing to that. As far as the markets go, it is a positive day, but the moves are relatively muted. We're up just about 0.25% on the stock 600 in Europe, while futures are pointing to a firmer open here in the U.S. We're up about 8 points on S&P E-minis. In the Treasury market, we saw yields moving lower yesterday. We are now unchanged at that level. 1.62% on the 10-year. And then Bitcoin is creeping higher just off of that 40,000 level. Still, though, we are down about 8% on the week. Of course, the fact that Bitcoin is stabilizing a bit this morning is aiding some cryptocurrency-tied stocks in pre-market trading, Marathon Digital being one of them. It's up about 2.4%. And then Tesla, as we know, closely tied to this story as well. It rebounded about 4% yesterday after a few days of steep decline, and that rebound continues this morning, up about 2% in early hours. And then I'm just going to talk about some more auto stocks, Matt, just because I know they're near and dear to your heart. Ford is another outperformer in early hours, up 1.5%. To the downside, though, Lordstown Motors, of course, an EV maker. It fell more than 15% yesterday after an analyst over at Wolfe Research slapped a $1 price target on the stock. This morning, it's down another 6% in early hours, trading around $9 a share, Matt.
Yeah, a would-be EV maker, right? Because they don't actually have an electric truck out, whereas Ford yesterday showed its F-150 Lightning, and I'm very excited about that, so I appreciate you bringing it up. I wanted to just point out a chart that I was teasing on radio earlier. I was trying to get radio listeners to switch over to television to see this chart, because what it shows you, Francine, is major central banks' balance sheets. And what we can see from this is that the European Central Bank, as you well know, is still expanding its balance sheet. The Fed also to some extent, but not the same extent, whereas the Bank of Japan and the Chinese Central Bank balance sheet are turning over now. So this may give a little bit more ammunition to growth and to inflation that Christine Lagarde so badly wants to generate.
Now, Matt, today's big take story focuses on the rise of mega firms. Gone are the days when IBM and ExxonMobil topped the list of the world's biggest companies. Now, tech titans and Chinese firms are dominating. These companies are bigger than ever, and they're challenging policymakers who may want to rein in their power.
The world's biggest companies are cashed up and thriving. Last year, the top 50 raked in nearly $800 billion in profits. That's equivalent to almost 1% of global GDP. Let's break down the trends. 30 years ago, there were no Chinese firms in that group. Now there are 8, and tech titans are on the rise, from 3 companies then to 21 now. Mega firms are changing the look of the economy. They're hiring fewer workers, more likely to add capacity in the cloud than build a new factory. When they do invest, they often have enough cash without having to borrow. And they're paying less tax, too. The median rate for the world's biggest companies has dropped from 35% in 1990 to 17%. President Biden's corporate tax plans and China's regulatory crackdown both suggest policymakers are trying to rein in the mega firms. And history shows, at the start of the last 3 decades, around half the top 50 companies have been new. So maybe they shouldn't get too comfortable.
All right, our big take story there on the rise of mega firms. Joining us now to talk a little bit about this is Dennis Snower, founder of the Global Solutions Initiative. They advise the G20, among other things. And I will say, I hope it doesn't embarrass you, a pretty famous Austrian economist. Grew up, I think, in Vienna, then went to school in the West. What is your take on this, Dennis, when we see, the top 50 companies now have 28% of global GDP, and 30 years ago it was only 5%. 30 years ago they invested almost 10% in capex. Now it's only 3%. So everything seems to be going in the wrong direction.
I think we are entering a new world, and we will need to adjust to it. Big companies are making huge profits for the simple reason that users often do not have rights to the data about themselves. And if users got more control over their data, then you'd see a totally different economic development. Also, this new world that we're approaching is one in which there'll be radical shifts in the labor market, and therefore having adaptability built in policy will become incredibly important.
So what can be done to rein in these, giant mega tech firms? One suggestion has been, of course, to raise corporate taxes, to have a global minimum tax on, I guess, the more radical end of the spectrum. There's a lot of talk about breaking up some of these companies. What would you suggest?
I think breaking up the companies would be terrible because large companies manage to serve large user networks, and the larger the network, the more valuable it becomes. What's critically important is that users gain control over the data about themselves. So if you generate data about yourself, then you should have control over how that's used, on what terms you sell it, and so forth. Official data, like your name, your passport number, and so on, that needs to be authenticated by official sources so that you don't have multiple data identities. And in terms of data commons, where people get together to share data, there should be a fiduciary responsibility to people within those networks that it's only done for their purpose. And then I think you would break this mold. And the basic problem that you have nowadays is that these big tech giants have interests that are not well aligned with the users. And if the users got more control over the data about themselves, then they would be driving the system rather than the profit motive of the big digital service providers.
Dennis, will a lot of these big companies actually be broken up?
I think breaking up the companies would simply dilute the networks and make it more difficult for users to communicate with one another across the world. One thing that we really have to guard against is the balkanization of the internet. That different systems, China, the US, Europe, each have their own systems, and that companies get broken up in accordance with regulatory preconceptions that are no longer adequate for the world that we live in today. The world that we live in today is we're moving away from an industrial world where machines and factories were the source of most value to a world in which data is the most value. And we need to change our thinking, and doing that will mean giving users control over the data about themselves. That has huge implications. Right. And if we follow that, I think everything else falls into place.
But Dennis, who would follow that? So this needs a regulator, right? This needs to some kind of authority to go after them. Who's the person that would take that on?
So it is governments that will take that on, and it is exactly parallel to development that we had hundreds of years ago when we went from indentured servitude to a labor market where people could trade their labor services freely. Now we want to give users control over their data so that they can trade freely and thereby empower the market system. So if the EU became the place where this happened, that would attract a huge amount of economic activity to the EU, just like economic activity was attracted to Great Britain and the Netherlands in the early stages of the Industrial Revolution, where labor markets became free. Well, that is, I think, where thinking needs to go.
Dennis, I'm so glad that you mentioned the labor market. I do want to talk about the labor shortage we're seeing, not just here in the U.S. where I am, but globally. Do you think generous fiscal policies are contributing to that, and how do you fix it?
I think clearly generous fiscal policies are contributing to labor market shortages, and the way to fix it is to focus on adaptability. The problem nowadays is not a standard Keynesian recession, and therefore we definitely don't need job furlough schemes and so on. What you need is to train people for the jobs of the future. And we are entering a world which will be much more digital. Technological progress is driving us into new areas. And so instead of job retention schemes and furloughs and help for struggling businesses, what you need is help in adaptation to new situations. So therefore, active labor market policies and their equivalent in the capital markets, financial markets.
I'm glad you brought up Keynes, because you are quite literally an Austrian economist. I know you ended up at Oxford and then Princeton, and you're an American and a German citizen, etc. But it doesn't seem that the disciples of Hayek even exist anymore. What happened to the school of thought that pushes back against Keynes that we saw so strong in the 80s? Where are those economists now?
Well, you have development in economic thinking. After the war, Keynes played an important role because he recognized, and in the Depression particularly, this problem of excess supply. And you need to pump prime economies to increase demand. And then in the 70s, 80s, we had the neoliberal revolution, which understood that the market mechanism is a powerful force for change. And now we need to come into a new way of thinking, which is when you have excess supply in some areas, jobs that aren't coming back, and excess demands in other areas like medical equipment, tech, delivery services, then you need to rematch the demands and supplies, enable people to get new skills that are relevant for the future, and the skills are not ones that can be taken over by machines. So, what are machines good at? Machines are good at routine jobs, foreseeable jobs. What people need to do is combine their technical abilities with interpersonal skills. Machines aren't good at interpersonal skills. Machines aren't good at taking responsibility. Those are the human skills that are needed for the labor markets of tomorrow, and policy should focus on that.
And empathy. Dennis, thank you so much. Dennis Noer there, founder of the Global Solutions Initiative. Now, coming up, the U.S. proposal for global corporate tax gaining steam. More on that next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an exclusive interview with Christina Minnis, Goldman Sachs Global Head of Acquisition Finance. This is Bloomberg.
I do believe there is potential for agreement on these matters. I do believe we are going to see change across 2021 and 2022 in relation to how very large companies are taxed. I believe the likely way in that change will be reached will be inside the OECD. And of course, the impetus of President Biden and Secretary Yellen to change how American companies are taxed is an important dynamic in the process that's underway now in the OECD.
That was Irish Finance Minister Paschal Donohoe speaking to Bloomberg's Maria Tadeo from the Eurogroup meeting in Lisbon. And of course, that follows the Biden administration now pushing for a 15% global minimum tax that is lower than the 21% they were asking for previously. Joining us now is Bloomberg's editor-at-large, Marty Schenker. Marty, so a lower than maybe wanted 15%. How does that complicate the push for a 28% domestic corporate tax rate in the U.S.?
Well, it's an interesting compromise. What I think the Biden administration is trying to do is get the global minimum tax out of the way, then pivot to the much more complicated and difficult higher corporate tax rate in the U.S. They say 28%, but that's probably not going to happen.
Marty, overall, so do they just want consensus? And is 15%, something that will achieve consensus amongst OECD countries pretty quickly? And is there, though, after that, is there a danger that 15% then kind of becomes the maximum around the world?
Yes, as you point out, Fran, the Bloomberg Opinions, David Pickling pointed out that, ironically, by setting a 15% target for minimum, you actually may cause a rush to that level globally, so you wind up having a maximum of 15%, which undermines the whole effort.
Wouldn't it be great if countries around the world set their own tax policies, Marty, and then competed the way states in the U.S. did for those companies that they want working there? For example, Ireland has a 12% tax rate, and it's drawn Apple and Google to its shores, and they seem pretty happy about having them there as well.
Yeah, I don't know. It may be great for the corporations, but for the countries in which these companies really base their operations, it's considered a missed opportunity to gain tax revenue. And as you know, the competition within states on tax rates was really kind of a destructive effort that undermined states all over the country in various spots. So it would be somewhat chaotic if every country was able to establish their own tax rates and competed for corporations.
Marty, I want to pivot to foreign affairs because, of course, we now have a ceasefire in place between Israel and Hamas. Will the Biden administration now take a back seat to that conflict and focus elsewhere in the Middle East, like Iran, for example?
Well, it's clear that the Biden administration doesn't have a comprehensive Mideast plan. They are sort of behind the scenes from the beginning of this conflict. There's suspicion about the U.S. based on Donald Trump's very close relationship with Israel, so they don't have any standing with the Palestinians. So it's very hard to see any way the U.S. could play an important role in solving the generational conflict in the Mideast.
Marty, thank you so much. Our Bloomberg editor-at-large, Marty Schenker, joining us today. Now, coming up a little bit later on Balance of Power, we'll be speaking to the IMF Managing Director, Kristalina Georgieva. That's at 12 p.m. in New York, 5 p.m. in London. She's pretty punchy usually about taxes, so it'll be interesting to get her thoughts on the latest Treasury proposal. This is Bloomberg. Tom Keene, co-anchor of Bloomberg Surveillance, now joins us. Tom, I really kind of want to ask you about puppy training, but I don't know if I can make a parallel between puppy training
the answer is get a second dog. Get a second dog. If you get a second dog, it takes the pain of the first dog away.
Not going to happen. You're focusing on labor participation.
Yeah, I am. I'm focusing on the American recovery and, of course, the European recovery is there. I know Matt's living that in Germany in spades. Here, the best chart is 25 to 54. This is the heart of the American labor economy and the participation rate, the ugly collapse coming off the crisis of 2007, and then that grudging recovery that we saw that was given up for the pandemic. And it sort of says, Francine, like where we are. Now, this is lagging data. That's going to get a lot better in the coming months. But that's a beautiful representation of what we've got to get back to and then where we need to excel to try to get back to the morning in America of 2006.
Yeah, and then always look at whether we're creating quality jobs that people actually want. I can't find a dog trainer actually in London. That's a job that is just,
Matt, she doesn't want to talk economics, finance, investment, and international.
I understand. She wants to talk about the new puppy.
Yeah,
that's what I would want to talk about too if I had a new puppy.
And I really think it shows really the opportunity here, Francine. Seriously, in America, the event is Chewy. And Chewy has just been, just extraordinary as a success away from Amazon. It's really one of the few stories in pets away from Amazon.
Yeah, it's a big business story. See, I do want to talk business, Tom.
I mean, Kailey, that was
You're also looking, I imagine, at taxes and some of these loopholes.
I'm looking at some of the tax loopholes. I think it's, I don't know what to do with that story, frankly. I mean, we came from 21% down to 15%.
Okay, well, we have full analysis throughout the day. Our Tom Keene, co-anchor of Bloomberg Surveillance. Kailey, what are you watching for the rest of the day?
Well, what I'm going to be watching is any dogs available for adoption in New York City, because now I really want a puppy. But deer earnings are coming up in just a couple of minutes. Watch for supply chain issues. That's what I have my eye on in the near term, Matt.
I am watching the Ford F-150 Lightning launch. Actually, it's sort of dripping out over the past couple of days because Biden kind of sprung the launch on Wednesday. But, I have always wanted a giant, naturally aspirated internal combustion engine. This thing, though, looks pretty good. I may go green with this thing.